Hey everyone.
How are you?
Good. How are you?
I'm fine.
Good.
Look at, can you guys see this? My cup.
And
says,
mine.
Yeah, it says Joyce and Soshana there.
Let's do a toast.
Toast.
United Talk.
United Talk. I was like so excited, right, to receive this cup. So I'm like, dang, he came in. And then I'm going, gosh, I'm left-handed. And it's like, what's up with this? They would not let me customize it. I think that's what it was.
Oh.
So I didn't even think about it until like, oh God. Now once I get it, I'm like, dang.
We're going to find you a lefty cup.
No, you know what? Like I visited San Francisco. They have a lefty store, right?
I'm sure they?
Yeah. And I was there about 39 years ago or something, right?
Mm-hmm.
So it was the second time visiting. I'm like, it's still here, which is really,
The same
store.
Oh,
Owner is the same. I don't know, but store is.
Okay.
It's for leftists, right? They don't have anything like, in my opinion, nice to purchase. So anyway,
they should try the cups.
I know I should write to them and say, hey,
try
guys.
this.
Yeah.
Yes.
But anyway,
we're gonna find you a lefty cup.
Anyways,
Now we're determined.
But you know what? Kind of like because I'm like so used to this.
Yeah.
Because everything is for right-handed people.
Oh.
So you kind of take it for granted. You know what I mean?
Next time I start seeing like lefty stuff, I'm gonna get them for you.
Okay.
Cool stuff.
Cool stuff.
Cool stuff.
Right. Right.
Joyce, I want to talk to you today about something.
What?
Okay. So, I've been talking to you about like new agents and things.
Mm-hmm.
And a lot of them, I feel like they need guidance as far as how to like manage their business as far as their finances are concerned.
Mm-hmm.
Because like even whenever I started in real estate, no one really advised me and said, oh, well, you know what? You can try to get an LLC or, like I didn't know what the pros or cons were of either like getting my checks in my name or in the name of an LLC. Mm-hmm. In fact, whenever I heard about it the first time, it was years. I mean, like I was in the real estate business for years already. Mm-hmm. And I was like, really? I could have my own LLC and it's legal to do that? And they're like, I didn't realize that it was okay to do that. So that was one thing. When I finally decided to get the LLC, it was like, it changed my life because everything before that, it was all like
commingled.
Yeah, it was all together. And oh man, it was so hard to do taxes and everything. Mm-hmm. And then once I had the LLC, there was a separation. And I was like, oh, so my business and me were not the same?
Right, exactly.
It's two separate things, right?
Yeah. So I think that's kind of like when you're starting your own business, right? Because all agents are your own bosses, right? Because you get 1099s. So basically everybody who's out there who gets 1099s, right, who's working as like contractors, let's say, they're not an employee of a company, then you are self-employed, right? That's what it's called, you're self-employed, right? So you usually just get checks, and you feel like, okay, this is, I deposit the money into my personal checking account. Right. And there are business expenses that happen, like you go out and eat, with business partners or somebody, like your clients, for example. And you kind of use your personal credit card. And you kind of like, okay, that's kind of like how a lot of times it's done. Right. But, the reason why you set up an LLC is a limited liability company, right? So the main reason is to separate your liability. Right. That's why it's called limited liability company. It's saying if you were to set it up, then whatever happens in this company is not going to spill over
in your personal.
Right, exactly. So you can kind of protect your personal assets. Right. So let's say you own a company right now, right? So you own a company and you do your own thing. So if something happens here because of what you do as a business owner, then that liability is going to stay here. It's not going to have any impact on your personal, let's say, assets, like your savings account, investment account, your house, second home, whatever, right? But let's say you do all that. Now you go out, you make a mess of some sort. You personally do something. For example, you go out and you get into an accident at your fault, right? Then it impacts everything because you're the one owns everything. So what we're trying to do, what like self-employed people, all business owners are trying to do is like, but at a personal level, you have different kinds of like insurance, right? Automobile insurance, homeowners insurance, umbrella liability, all kinds of stuff, right? So you're like, okay, I just need to make sure that this is a separate entity. And I think having it separated, meaning you create a company, it's an LLC. It is also important, once you set that up, you want to obtain a separate tax ID for that entity. Right? Once you have that, then you want to go open up a business account. Checking account. If needed, savings account, credit card. And what it does is this, like if you get ever audited, right? If you commingle everything, you have to show everything, even your personal life. You see what I'm saying? If it's business related, if anybody wants to see your books, then all you got to do is just take that out and show it to them. Right? That's very, very, very important. It becomes more important when you set up a corporation. Because when you like commingle stuff, so then they call it like the corporate veil is punctured, meaning now, it's all considered one. Right? So there's no protection in that sense, liability protection. So you set it up that way. And so that's like the first thing that I recommend every new business owners. You go open up a company and then you get your separate tax ID number. And then you open up a separate checking account, savings account if needed, separate credit card. And use that credit card for anything business related. And I get to see sometimes like, like there's this like expensive, for example, like Chanel bag purchased with this business credit card.
I don't think that's a good idea.
No. And then they go like, so we, our staff calls them. I was like, was this a business expense? And the answer is, oh, that was a gift to blah, blah, blah. As far as tax deduction is concerned, as a gift, it's only $25 per person, right? Which is crazy, though. In my opinion, it's crazy. They have to redo the code. They have to rewrite it. I think they need
to do that because, I tried to do that.
What can you possibly get?
It looks tacky. It feels tacky.
Yeah. What can you possibly get with $25?
You go to Costco. Costco has some nice little things, but still, it doesn't feel like for the price of what they're spending or the amount of money that they're spending.
It's like you can't, you know what I mean?
Yeah.
Not reasonable at all. They have to up it, really. But for now, that's what it is. So then people ask me, so does that mean that I can only buy something that's worth $25? No, right? You can actually buy me this as a gift. Let's say this costs like $300. What it means then, up to $25, you can deduct it as business expense. The rest of it is going to be considered your income, meaning you're not going to be able to deduct it.
You see? Got it.
Yeah. Okay. So that's kind of like...
Well, that's a good explanation because I think people don't know that. I didn't know that. I didn't realize that.
Yeah, so you can actually do it. But as a business owner, this is truly a business expense. You know what I mean? Unless you're bribing someone, which none of us is doing.
No, absolutely not.
No, we're not doing that, right? So this is truly really a business expense, right? So, instead of giving some kind of gift that's like, costs $300, but you're so limited in terms of deducting it, then you may think of doing some other stuff instead of that.
How about a meal or something?
Meals is fine, right? But as long as they're not, something crazy, expensive. Let's say you and I go out, right? And you're like, okay, Joyce, this is my treat because blah, blah, blah. We talk about business, right? The meal comes out to be these days like $100, $150 or something like that. And that's kind of reasonable. And what you do then is you keep the receipt, right? These days you upload it to, portal and you keep it that way. Electronic form is so much better, right? So you do that and you write down as, okay, the person you had dinner with, Joyce School, and the amount, what if, what we talked about, for example. So you're supposed to keep a log. The thing about it is, I'm sure everybody knows, IRS code has written long time ago. It has not really gotten updated, in my opinion. They have to do a whole lot of work. But anyways, so that's kind of the law that they recommend that you keep. So for that, you can certainly do that. But let's say you and I go out and you go like, oh my gosh, the bill comes out to be $500. Then it's kind of like over the edge. In other words, you're now then talking about like, was there any entertainment? Entertainment expense is not deductible expense, right? Mm-hmm. Okay. So you kind of have to be careful.
Yeah. But there's some really expensive restaurants. I took my husband one time to a really expensive restaurant. I was like, oh my God, that was $400.
Right. Yeah, there are some.
So if it's something like that, not taking my husband out to dinner.
No.
But but a real business expense, that's doable. As long as there's no entertainment.
You can definitely take your husband too, because he's an agent. You guys all can have work related. Okay. Yeah, absolutely.
Okay.
Yeah. But then that's kind of like the barometer, I guess. You can kind of think of, okay, whenever I do. Here's the thing, like, and when you're starting a business, okay, now you have the company, right? You've got the number and everything else. All your accounts set up. Now you're busting your butt off and you make money, right? And I think managing money then becomes such a huge issue, right? Making money is hard, but I think sometimes managing your money is even harder, especially when you become a new business owner, because you don't know what to do.
Right.
So we talk about budgeting, right? Yeah. So there are two ways of doing it, right? Top-down budgeting versus like bottom-up budgeting. Top-down means, okay, you start with your revenue, and then you revenue minus expenses.
Okay.
Whatever is left becomes your profit. Okay. Which is actually can come into your pocket now.
Okay.
Bottom-up budgeting is like you start with the bottom. In other words, you start with the net profit.
Okay.
Okay, you go like this. Okay, Joyce, at the end of the day, I'm just like working so hard, and at the end of the day, I want to at least have $10,000 left in my pocket. You start with the net profit, $10,000.
Okay.
You work backwards, right? Okay. So you go, okay, now I have fixed expenses. You play with that. And then in order for you to have this kind of profit, what kind of revenue should you bring? So then you can certainly work with self-employed people. Like, for example, in your case, your agents, you go, okay, if this is what you want, these are the potential expenses, right? Then this is what you need to bring in. Okay. In order for you to bring this amount in, like what kind of action plan should you have?
Right.
You know what I mean?
Right.
Okay, if I need to bring in 15,000, right? You multiply that, and how many houses do I have to sell? Right. In order for you to sell how many houses, how many people should I have to talk to?
Each day.
Right. And how many people do I have to go follow up? Right.
Each day.
So you come up with that, and then, okay, now I have a plan. Now this is what I have. And when the money comes in, you really have to stick to it.
Right.
It's your temptation is crazy, especially for, I think, real estate agent is hard, because you guys don't have money coming in like, okay, this month you come in 5,000, next month you come in about 6,000 or 4,000 like that. Right. It's whenever you make the deal and
it actually closes.
It closes, and actually a big chunk of money comes in.
Yeah.
Then you feel like, oh my God, now there's this abundance of money. What do I do? You know what I mean?
Right. Yeah.
And it's hard to manage that. So you really have to like jot it all down and think it through. Once you have the money come in, you have to actually create different pockets to make sure that your expenses are going to be covered. And more importantly, who's going to come after first?
Right.
Who's going to come after first once you make the money?
Right.
Government.
The government.
Yes. Yeah, IRS. Right. So when you get the money, you need to make sure.
Yeah, that you set aside and forget it. Set it aside and forget it. Pretend like it doesn't belong to you.
That's what you do, don't you? That's what you do. So how do you do it?
Well, that's kind of what I do. Yeah. That's what I do. Like whenever we have closings, I have actually a spreadsheet.
I know. You're a
spreadsheet
queen.
Yeah. So and I hope I can remember exactly how it is, but it's already automatically set with the formulas and everything. So we have the closing, and then I set aside funds, like a pocket. I guess that's what you were saying, like a pocket, to put my operational expenses. set that aside, and then from there, whatever's left over, then I calculate. I say, okay, let me put a percentage aside for taxes from what's left over.
Exactly.
And I put that in a different pocket, and then the rest of it, I think it's our
money.
Profit, right? Yeah, so that's how I do it.
I think that's very important. So that's where it comes. Like, okay, you start with the checking account,
right,
which is the account that your money comes in, and you use that account to pay all daily expenses, right? And then you open up a savings account.
Right.
That's why you kind of open up a savings account to make sure that you take the money out so you don't spend it.
Right.
Because you don't see the money. Right, so there's that savings account, right? So you kind of split that, and you make sure that you're covered. And as a business owner, you know how when you get a W-2s, right? When you're an employee,
right,
they take the tax even before you see them.
Exactly.
So it's taken care of. For business owners, when you make money, you have to pay estimated tax,
right,
on a quarterly basis, right? Otherwise, you may incur some kind of penalties and interest for not paying taxes on time. Because U.S. tax system is a pay-as-you-go system. In other words, government wants your money right when you make it. You know, that's basically what it is. I want it now kind of thing.
Okay. So let me ask you a question. Okay, here goes a question. Okay, say that, you have to pay it quarterly, right? This is the estimated tax.
Yes. Yes.
What happens if you forgot to pay it the first quarter? You can pay it the second?
Oh yeah, you can definitely.
Is there a penalty for doing that?
Depending on, so estimated taxes are based on what you did in the prior year.
Okay.
Right? But let's say prior year you only have like 10,000 income. But this year, you know for sure you have like $100,000 income. Because you only had $10,000 income, for you not making estimated tax payments, the penalty is going to be minimal because that's what's based on, right? But you're going to be hit pretty hard when you file your tax return. So it would be wise for you to set aside the money and pay.
Yeah, so this is me. Every time there's a closing, money goes, a certain percentage goes straight to that savings account and forget it.
Right.
Just so that it happens. But I'm just wondering about that. Like if, for instance, if you forgot to pay that first quarter and you pay it the second, it's not that big a deal?
That's fine.
Okay.
But once you kind of have built your business, it's a lot more predictable.
Oh, okay.
Right? And then especially when you file your tax return, I'll give you estimated tax payment vouchers per se.
Right.
Nobody does use vouchers anymore, but like it's actually created, right?
Okay.
Because I think IRS is the last one to catch up with all this stuff. But anyways.
I do think that like new agents need that kind of information because really I remember how I did not know.
Yeah.
Yes. Okay.
We can certainly create these episodes, and you guys can certainly share that with your agents.
Yeah, I think so. I think they'd appreciate it.
Right. And if you guys have any questions, write it down. Then we'll try to address it the next time.
Oh, that'd be so awesome.
Yeah.
That'd be so awesome.
Yeah, because everybody has different questions.
They do.
Yeah.
They do.
So I think setting that system up is very important. And knowing that whatever money that you make, not 100% of it is yours.
One of the things that was really helpful to me, and it was just not this part. I didn't consult with anybody. It just occurred to me that it would be a good idea is to set aside that money for operational expenses. Like I didn't know, but it was so good because that helped me to have money to spend on my business things.
Right.
Because otherwise, what happens a lot of times with new agents, they're like, I got my check.
That's what I mean. I got my check. I see that a lot, really.
Oh, do you really? Oh my goodness. Yeah. And I tell them, I'm like, because what I want is I want my agents to be agents for a long time.
Yes.
Okay. And this is part of what they need to know is how to manage their money. Because if they don't manage their money properly, then the IRS is going to come after them.
I know.
And then they're going to be like, oh, this business is terrible because, I made all this money and the IRS took it all away from me.
Right. And you feel like you're like totally, your effort is now like gone and you're not getting anything. But actually, you only pay tax because you made money. it may not be in your pocket at the end of the year, which happens a lot to business owners. You file your tax return, I prepare your tax return, and you go like, okay, this is what's happened during the year, and this is the tax, right? And you go like, I don't have that kind of money. That money's not sitting in my bank account. Where the hell did it go? I hear that a lot. It's because that's where the cash management comes in, right? So, unless you intentionally do certain things, because, for example, let's say you own a retail store. Like, you have to constantly buy merchandise. You constantly have to buy inventory and stuff like that. And so if you don't pay attention to those things, you might have made money, right? But there's nothing left in your pocket. Right. But then now it's the time to pay tax. And then the really vicious cycle starts then, because you're like behind already. Right. You have to catch up. Right. So understanding how really money works in terms of like, okay, making money is important, but how you manage and how you save and how you now then invest and how to take advantage of like all the different codes that are available to business owners to like save, manage, and invest and prepare you for your retirement. I think it's like all in one thing. The more you know, the more you actually apply what you know, I think makes a huge difference. It really does.
We need to talk about that investment part of it. Maybe in another episode or something. Yeah. Because I think that's something that I feel even I could benefit from that type of information.
Sure.
Because you kind of get your system in place. Okay, it's working, okay. And
what now? What next?
Yeah.
Because I think it's constantly, it's exciting in a sense because you're starting here. And now this is my next step, my next step, my next step. Right. That's why planning is so important.
Yeah.
Because you know where you're heading, right? And when you're heading, okay, you're there, and what next, right? There's always something you can do. Like people create, as a business owner, there's so much you can do.
Yeah.
It's just so much you can do. As a wage earner, let's say you get W-2, what can you do? Okay, you can put your money into 401k. Okay, you can put your money into health savings account or flexible savings account, right? What else is there? Well, group benefits, okay, but that's about it in terms of taking advantage of tax deductions. Okay. For business owners, on the other hand, a lot of it, if it's business related, you can even invest in yourself, right? If it's related in your business, right? Or expanding your business, like education is a big piece.
Oh, okay.
Right? That can be deducted.
Oh, okay. Yeah. Let me write that down.
Yeah. All those things, right?
We have a lot of education going on.
Right. So there's that piece. And also like, okay, I have money left, but I don't want to pay this kind of tax. Then you could definitely set up a group benefits. And in that, as a business owner, right, you can put in a whole lot of money. Like literally a whole lot of money you can put in, depending on how you set it up or how I structure it, let's say, right? And there's not one thing that fits everybody, right? Because everybody's so different. Their goal is different. Your timeline is different. And your tolerance for certain things is different, right? Today I went to a meeting. It was kind of interesting. Like this guy was talking about real estate investment trust, right? And I'm not a big fan of that because my experience has not been that. But that may be a good option for those who are looking for like monthly income, for example, dividends, right? But for someone like you who's like has many years to work, you're not too concerned about that, are you? I mean, if you get dividends, you pay taxes right now, and it's like maybe not a good option. You may want to just live it somewhere where it appreciates. Right. The capital gain is there. Like if you keep it more than a year, right? The capital gain tax rate is much lower than your ordinary income tax, right? There are a lot of things you can take advantage of, right? So whenever I see like new business owners, I get excited because there's so much that can be done.
Right.
And also business owners are the ones who are offering these different opportunities to people, a place to work, right? And I think it's a shame that like we're losing a lot of small business owners.
Yeah.
Because I think they're really the backbone of like, everyday Joe, right?
Right.
Yeah, place to work, And so anyways, yeah. So I have, I become pretty like, I don't know. I get really involved with that, and I think it's really a shame that it's like small business owners are going away, and so we call it middle class people are going away.
Right.
And it's just like it's such a shame. I think.
Yeah. Well, we need to collaborate and help build the businesses that are existing.
Exactly, and local businesses.
Let me ask you something. Maybe this is something we can talk about in another episode too. Like for instance, different companies that maybe that do the same type of business, could they unite together and get like healthcare? Do you
know? There is, for example, there are certain group of people who can do it. Like for example, for CPAs, they offer that kind of grouping thing. But for small business owners, it's kind of tough because what it is that like. If you are an owner of a business, multiple businesses, then you can offer one thing
for all those businesses.
All those businesses, so they call it a control group, right? Because you're the owner, majority owner, let's say. So it's possible, but let's say you and other company are not related, right?
Okay.
Like for example, the broker society.
Yeah.
But you guys are all in the same industry, so that's something to look into. I can certainly look into it and let you know. Yeah.
That would be interesting to see.
Yeah, because you guys are all in the same line of business.
Yeah, and we have this broker society.
Right, but there are no wages paid. So that's what's kind of like it. In terms of like, okay.
What do you mean wages?
Because all the self-employment. In other words, nobody's getting W-2s from a company. So whenever they offer, for example, health insurance, which is a big concern, right? It truly is a big concern. It's so expensive.
Yeah.
So say we want to lump all of us together. Usually what they ask for is DOL form, which is Department of Labor Unemployment Tax Filing Form, right? Which shows, okay, I actually am working. I'm an employee of this company. But we can certainly look into it and see if they would work with, for example, broker society.
Like
yes.
Yeah, that would be interesting to see. Because that could be really advantageous for all the people involved.
Yeah, so expensive.
Yeah, it is. It is.
It is so expensive. So I know business owners, because it's so expensive, right? And a lot of times what's happening right now is like a lot of people have Obamacare. You're aware of that, right?
Yeah.
So say you're a small business, you're not really making a whole lot of money. So employees who are working for you, are not paid like huge wages, right? For those people, let's say you have those people, then they would be better off without company offered health insurance. Because if company offers health insurance, they're not going to be eligible to receive government subsidy when they get Obamacare. So, even if you want to offer them, they may not even want it.
Okay, got it.
You know what I mean? Because not everybody's making a certain amount of money in that case, and they'll be better off. With better coverage, less premium. So there's that piece too.
Yeah.
So basically, like before you jumped into anything, like you want to check with your people first. Would you guys be interested in looking into this? Would you guys be interested in getting group health insurance? If so, how much premium a month would you be willing to pay? Or how much are you paying right now? That would be a better question.
Okay.
Yeah. And depending on that, you guys can decide, okay, is it worth it? And only like few of us are interested. And, because like, for example, like let's say you make a certain amount of money and you look at your insurance premium, even for me, it's close to $2,000, right? For me and my husband. Right. So if even though company like subsidize 50% of it, you're still left with $1,000, right? The older you get, more expensive, usually. Yeah. So $1,000 you're left and you go, oh my God, do I want this? I'm pretty healthy. So a lot of business owners actually go to these plans that are like not insurance. What do they call it? Corporate, like there's Christian groups that they offer this like health, not insurance, health coverage. Okay. Which is recognized by the government as you having coverage, so you don't have to be penalized for not having insurance. Okay. But what they do is, you pay $500 a month, you pay $500, for example, $250, whatever. nothing is covered in terms of preventive care because it's not insurance.
Okay.
So let's say you go into a hospital, you got some kind of surgery, and like you got a bill for $30,000, right? If you submit it, they'll cover it.
Okay.
Depending on what kind of coverage you have, right? Because it's first come, first served basis. So basically, you guys are all putting money into one pool.
Okay.
And if whoever claims it first, they take it.
Okay.
Whatever's left, right? So a lot of people are taking that option as well because it's just too expensive.
Yeah.
Because it's like a mortgage payment.
Yep. Some people go outside the country.
I know, like even like Koreans too. They go to Korea. Seriously, I mean, like here, in order for you to get an implant, you know how much, like $5,000 or something like that.
Yeah. I've been guilty to go out. I've been guilty of going out of the country to get dental work done.
You shouldn't feel guilty. I mean, what are you gonna do? I mean,
you gotta do what you gotta do.
You gotta do. It's like dental coverage here is like really shitty.
Yeah.
It's up to like $2,000 and something. And so basically what happens, Koreans, they take, it's a $2,000 airfare. It's even worth it.
Yes. I mean, you get a vacation out of it and then you get your health care taken care of.
They're so good too.
Yeah. Yes.
Competency is like there too, so why not?
Yeah.
So even my friend, he may be back now. So a year ago he went. He got all kinds of like, what is it, like pre-work done.
Yeah.
And then he flew out last month to find out if get his like implants done. I was like, golly, like what a trouble. He says like, Joyce, you don't know how much I'm saving. If I were to get these things here, I'm gonna have to close my door.
Absolutely.
So crazy like that.
I mean, you have to do what's best for you.
I know. It's all your money too.
Yeah. So that's what we've come to. So
yeah.
It is what
emergencies is what we're all concerned about, though. So for that, for that perspective, then that's why people are looking into this cooperative, I guess, plans kind, in case because they cover emergencies or they cover like this big, huge, I guess, surgeries and things like that.
Okay.
Because my son was hospitalized one night. Okay, he had like minor surgery. Like I received this is like even 7 years ago. Okay, I received a bill, I think it was $130,000 or something. It was not only one bill. More are coming in.
Oh, wow.
Crazy. I am like crazy.
Freaking out. I would have been freaked out.
And so my out-of-pocket, I didn't expect to do this, right? So my out-of-pocket deductibles and all that came out to be like $10,500, some crap like that.
Yeah.
I'm like, who the hell is collecting all this money? Anyways, but it's expensive.
Yeah. I'm not going to say any names, but I used to work at a hospital that they would change the flowers every week outside. Okay? That's all I'm going to say. I used to work where my window was. It looked outside. I could see them changing the flowers. Y'all changing the flowers again? Anyways, so.
All right, I think time is about up too.
Yeah, they're giving us a sign. So, all right, it's good seeing you.
Same here.
Yeah.
We'll talk more about the things that people ask us or, we are interested in.
Yeah, or if anybody has questions that you want us to talk about, let us know.
All right. Till next time.
Yeah, it's great to see you. Thanks for watching this week's video. If you have questions on anything we covered or you'd like to ask us, just leave it in the comments below. We love to hear what you have to say about what we talked about and what you want us to talk about. Please like us on Facebook, follow us on Instagram, and subscribe to our channel. See you next time.